years and years and years of information that you have downloaded and that you have run a study on. And so, what have you found on that information, and what asset did you look at first?
Well, this is the S&P 500, but it's the futures contract. So the symbol is ES.
Okay.
And so we're looking at S&P 500 futures. And what we're testing here is the overnight hours versus the regular trading hours. So regular trading hours are from 9:30 a.m. to 4 p.m. Eastern time. Okay. So that's when the New York Stock Exchange regular trading hours are. And all we're looking for is overnight highs and lows before 9:30 in the morning. So the market will open at 6 p.m. at night, the futures market, and the S&P 500 futures will trade, for 23 hours. And we want to take the overnight high and low and see what it does. Like every time, how often does price when the market, the regular trading hours open at 9:30, how often does price go through the overnight high and low, and what does it do? You know, or at least a general idea. So basic classifications, really simple, not as complex as we could get or we're going to get later on. As this channel grows, we're going to do some more, but just a basic classification system.
All right. So the top one is stayed inside. So the regular
Yes.
trading hours high was less than or equal to the overnight high, and the regular trading hours low greater than the overnight low
Yeah.
basically stayed inside.
Yeah. Stayed inside.
Okay.
Yeah. Stayed inside. So that's one classification. So how many times does that happen?
Okay.
Yeah, what percentage of the time does that happen? It doesn't hit the high or the low overnight. It just stays inside. And then, your other classifications is talking about the high. So you got broke high only, broke high only. So it can either break the high and close above, or it can break the high and close inside of the range without hitting the low, right? And
Right.
then you have a broke low only and a broke low only. It either closes inside or it closes below it. And then you have so you got one, two, three. This is your fourth classification. It broke both. It hit the high and the low. So what
Mm.
are the different scenarios you can do with that? Well, you can hit the high and the low and break below it, which would be over here on the right. You can break both and close above it, or you can break both and still close inside of it. How often does that happen? And how many
Okay.
times does it happen? So a lot of people in their trading, morning preparation will mark the overnight high and low on the chart as a support or resistance or a point of interest, however you want to look at it. So it's a big part of a lot of people's trading routines, or at least is what's taught on YouTube.
Right.
A lot of people talk about overnight highs and lows. So we're going to look at it. So we'll go to the next slide. And this is your stats on it. Okay. The sample starts from May 14th of 2001 and it goes to August 7th of 2025. So it's 5,427 days of data on these
Mm.
highs. Okay. So this these stats up here are summaries. So this counts. Um, it did not close inside at all. No matter what it did, it could have broke the high and went higher, or could have broke the low and went lower. It could have broke the high and the low, but it did not close inside. No matter what classification, it did not close inside. 52.52% of the time, it did not close inside the overnight high and low range. 47.48% of the time, it did. Pretty 50-50. This one right here is 12% of the time, almost 13% of the time, it breaks both the high and the low. So a little over 1 in 10 days on average over 20 years, you could expect price to hit both the high and low. Now, it could have closed inside or it could have broke through them. But it's just how often does it hit both points?
Right.
So, yeah, so it's really 50-50 whether it closes inside or outside of it. That's
Mm.
kind of what to take from this. The S&P 500 has an upward bias. So I would expect it, as we're going to see down here. Let's just go here. So if it broke low and returned inside 873 times, 16% of the days. Okay, roughly. It broke low but kept going. It closed below the low 1,000 days, 19% of the time, or roughly 20%. Now it broke high, returned inside 797, 14 something percent of the days. And then here's kind of the one that shows kind of how it's just kind of skews to the upside. It broke high, but it closed above the high. So it broke through it and it closed above it 26% of the time. And then, the broke both. You got three different, you can break both, close above, below, or inside. It's pretty even. Obviously, the above's a little bit more, and the close below is about the same. Um, Broke both, stayed inside about 6%. So sometimes it'll hit both the high and the low. About 6% of the time it does that, it's going to be inside, at least based
Mm.
on past data. Um, the times that it stayed inside that range, and yeah, it just stayed inside. It never hit the high or the low 10% of the time. So about 1 in 10 days, um, it'll um, it'll just stay inside. So you can almost expect, at least historically, uh, you know, that it'll stay inside those days. So, that's all it is. A pretty basic study, but it's just something to introduce the channel. We're going to do more. Like, there's more metrics you can do on this. Like, okay, is it Monday, Tuesday, Wednesday, or Friday? That's the best days. What if we cut Monday and Friday out of it? Does it trend more on Tuesday, Wednesday, Thursday? Does it trend more
Right.
on Monday, Friday? And then, the other thing we don't have is how big of a move was in the overnight session. So if you get an above average move in the overnight session trending, does that trend continue into the regular trading hours? So, I mean, there's a ton of other filters we can put on this, but this is just your basic. The thing to take away from this, whether it closes inside or outside, it's basically 50-50. You got a little bit, probably an upward skew, like where you see this 26% where it closes above versus where it closes below the low. That's probably your difference here because the market goes up more than it goes down. But yeah, it's pretty 50-50. So if we apply other filters to it, which we're going to do in another video, we're going to continue on this. Um, you know, we'll see. We'll see if we add more filters that we can actually filter out some noise or not. So
Right.
that's basically it. Just a simple study. We're going to do something a little more complex eventually, but just to start out the channel, this is what we're going to go on with first
All right.
video.
Sounds good. And I'll have some questions for you next time. I got to study it myself a little bit. That way I can have some intelligent questions to ask. And one thing I know I'm going to bring up at some point is there a way to filter for red folder days? Like, is that pushing
Yes.
it,
Yeah, you're
you
you're
know?
talking about high impact news, right?
Yeah.
Okay. So high impact news, absolutely. So we could say, okay, how many days away are we away from this announcement? Are we after the announcement or are we an hour before it, 10 minutes before it? Yeah, there's definitely a lot of that coming up. We're going to go through
Okay.
all that.
All
Uh,
right.
and we might even get into correlated assets. So how's the NASDAQ, Russell, and Dow trading today as a whole? And then how does that range react to that?
Right.
So there's a lot more coming down the road. So
Okay. All right. Well, until next time.